All right, should be live again. So let's open up YouTube. And this should be the new stream right here. Yes. Copy and paste the link, and I'm going to paste it into Discord. Right here, this is the new link. I'm not sure why it cut out, maybe because of my poor internet connection. I'm not really sure what's up with that. To break our short-term low right here, our lowest point so far for this day. So if we broke it, we are forming a new low of the day, potentially going to seek our target at a minus 0.75 standard deviation of our RDR range. So now we should be able to look at our USD JPY daily chart, or aren't we? No, that might not be working out. Let's just wait and see and watch indices. What is the link for YouTube? Stop working for some reason. Okay, perfect. That should be working now again. Let's go back to our USD JPY chart in case that's ever going to load. Next week, everything's going to be better. I really hope so. So I'm going to be streaming again on Wednesday, I assume, after my little skiing holiday. It's actually the first time we have snow here this early in December here in Germany. Quite massively, actually. All roads are closed. It's pretty crazy. Hasn't been snowing here this much, at least before Christmas, or having white Christmas has been a rare occasion. I think for the past 5 or 6 years, when I was a little boy, still growing up here in Germany, we used to have white Christmas. I was able to build like big snowmans and everything else, like play around in the snow. And nowadays, young children here in Germany, so I think that's a bit unfortunate. Might be due to global warming, but I'm no specialist. Alright, so let's see. Come on, why is this not loading? Alright, looks like we're not up. Little fake out. Trapping traders short at the low of the day, forming some sort of a double bottom. Maybe going for this volume imbalance here right at, let's use a price tag right here, price label. For this volume imbalance at 3890 and a quarter, 3/4. USD JPY finally started to load. That's where we're currently inside on, so the IDR was also confirmed bearish, so we could be looking, if in case this is not going to hold, we could be looking at this bearish fair value gap right up here for a short continuation here on a 15-minute time frame. But overall, likely to be from one of those areas. We still have some fair value gaps here on a 15-minute time frame that have not been filled in. We have relative equal lows, sell side liquidity right here on USD JPY, which would also be a target for sell side. It has not been taken out yet. Just keep that in mind. Sell side liquidity, we took out the most recent buy side liquidity. We basically refilled this huge volume imbalance or this liquidity void right in here with this move to the upside, basically from Tuesday all the way up through Wednesday and Thursday. So we got our high in, and now during Friday we started to consolidate and we broke down lower. So we will see what we get. And no, I don't have any bias on USD JPY if this is going to continue up higher. I would have to do some more analysis also on a higher time frame. All right, let's look at our charts. We're now inside this bearish order block based on this bullish up close candle right here. But let's hope that we are going to move up higher for a better entry inside of our opening range, starting from 9:30 until 10:30 a.m. New York local time. So we hit that 50% level right here at 3880. Let's see. Okay, so we actually found something interesting here as well. Right here on Nasdaq, I mentioned earlier that we did not take out this lowest liquidity right here. This is relative to our low that we formed this, let's say, late London session. So on Nasdaq, we haven't taken it out yet. So we did not make a lower low on Nasdaq with this move to the downside right here at 1030. But now we've actually found some SMT divergence. So let's color this in yellow. Because on Nasdaq, we formed a lower wave, formed our low right here, followed by a higher low. We already got into our first fair value gap right, 50% level of our opening range. So we will see what we're getting. We're right now inside this bearish order block right here. So we will see. Nasdaq hasn't been following US 30 or S&P for today. We also had this bearish SMT divergence right here, because on both S&P and US 30 we formed lower highs right here at 10 a.m. New York local time and 2 a.m. New York local time. Right here we formed lower highs on both of those two indices. Only on Nasdaq we formed a higher high, which could have given us that final piece of confluence, or that final piece of the puzzle, to take this entry short right here at the optimum trade entry based on ICT concepts, and this fair value gap right here of our overnight range premium PD array. Take it short for our final take profit target at our negative 0.5 standard deviation, which has been taken out, and now we're consolidating. So we will see if we are going to move further down to our negative 1 standard deviation of our overnight range, which is also matching up almost perfectly with our negative 0.5 standard deviation from our New York opening range. So let's have a look and wait and see. I'm going through chat quickly and see if there's some new questions. Sorry, can you repeat the stuff and conclusion of SMT divergence? So SMT divergence most of the time is only confusing me, especially if we're talking about indices. I think it's at least for me personally, it's a greater tool if I compare for example, a British US dollar pair, and I compare this one directly with the DXY, because those two assets, they're heavily correlated. Indices or US indices are out here, and you only see Nasdaq forming a higher high. This could be a sign of, or a confirmation sign that this is actually going to be the peak right here on SP500 and US 30, where you could have taken this short right in here at this 10 a.m. or 9:50 a.m. New York local time high. US 30 or USD JPY can be closed. Up a, no, let's just stick to the charts we already have opened. USD JPY forming some sort of a downwards channel right here. ES still in this DR slow consolidation. We will see what's happening from here. We try to move closer to this area, to this low basically, but buyers stepped into the market and bought prices back up quite massively. So to get back to the SMT divergence question, I think one more point I can make is that, let's say you're trading the S&P only. You're only using the Nasdaq and Dow Jones to look for confirmations such as this break of the higher high, confirming your short bias already inside this premium PD array around the optimum trade entry to take it short. All right. But the most important point about trading is to keep it simple. And I think TheMas7er did a great job with his opening range indicator here and the concept he's teaching, because I know that ICT smart money concepts are pretty hard to understand, or maybe not to understand, but actually to be able to execute it live, you need quite some experience for that. All right, so let's see if we actually get an entry before I have to end the stream around 6 p.m. my time, because I have to take my dog for a walk. All right, GBP USD, finding resistance right here at this sell side liquidity, which is lining up perfectly with our IDR slow. No, actually, that's not the IDR slow. For a continuation trade into those fair value gaps and our current daily slow. But we will see how this week's closing. Overall, it's Friday. All right, Nasdaq's dropping and leading right here out of this consolidation moves to the side. Let's wait and see if Nasdaq is able to break those two lows, and if the S&P and US 30 is following, basically, because then the reaction of this block right here, this bearish order block, would have been a valid entry. But like I mentioned in the stream yesterday, I would not be interested in taking a trade right here. Maybe if you, I don't know how I would say that, but you could definitely risk 1% of your account right here. If it's not working out, you try to get another entry right around this fair value gap, or maybe this volume imbalance. And yeah, I mean, the risk reward, even if you lose 1% here and 1% here, and the final reversal point is ending up right here, you're still ending up with a possible, let's say you use the optimum trade entry for a sell limit, and your stop loss is going to be, let's be conservative, our DR or IDR is high, and our target is going to be our 0.5 deviation. This is a picture perfect for risk reward ratio. So even if you would lose your first trade here, let's say this trade did not work out, and your fair value gap trade right here did not work out, or maybe your volume inefficiency trade did not work out, you only lost 2%, and then you, as long basically it requires you to not give up. Just because you lost 2 trades and you were wrong 2 times does not mean you're going to be wrong for a 3rd time. It's all probabilities, and you have to take all the trades in a sequence to be actually able to benefit from probabilities. If you handpick a few trades out of a sequence, it's not going to work. Then a 88% probability of win rate is not going to help you at all. It's like rolling a dice. You can't predict the next number after you rolled the dice, but you can predict that, for example, over 100 throws, you're gonna throw a 6, I don't know, let's say 33 times out of 100 throws, but you are not going to be able to determine which which throw was a 6. So I hope you understood what I'm trying to say here. You're able to predict how often you're going to throw a 6 within the next 100 throws, but you're not going to be able to predict which of those 100 throws is going to be a 6. Please increase the number of viewers and watch stream. How do I do that? If you can give me a quick tutorial of how I'm able to do that, I will. Otherwise, I have no idea. I never host a live stream on Discord with too many people watching. That's why we have the YouTube stream going on at the same time. All right. So we broke back below our DR IDR low right here. We're now starting to wick back inside. Let's check on Nasdaq and Dow Jones. No divergence anymore, at least not really. Let's check GU. Bearish close, no wick to the downside. Could be looking at a beautiful down continuation trade. A little trick of how you can enter with a for a better, let's say, short position instead of entering right here on the candle close, is that most of the time price likes to return back at least a little for a better entry. So being patient and not being in a state of FOMO where you think, oh, okay, after this candle it's just going to keep collapsing. Very rarely that's happening. Like for example here, where you only got this small wick to the upside, but for example here you got a bigger wick to the upside. Same here for a continuation move to the downside. All right, so let's wait and see what's happening here. S&P 500 is still going sideways. We might want to look at, I don't know, some price action post lunch hour. So right here at 1 p.m. New York local time, we could be looking at our entries somewhere around this volume imbalance or those optimum trade entry fair value gaps up here. Market's going to close today as well, so make sure to close your positions unless you like leaving trades on over the weekend. I personally don't. Alright, I'm just going to reply to a few questions on YouTube on the stream. Alright, so where we at? Telegram. Sure. Come on, sure, but it might be. Alright, pretty boring price action right now, just going sideways. Let's check our indices chart again. Still, same SMT divergence, formed a lower low. We're still inside this range. GBP USD still in this descending channel. USD JPY also still inside our 15-minute order block with those two 5-minute fair value gaps down here. That we also just going sideways right now, so something must be going on. USD JPY just going sideways. Major indices just going sideways right now, so we can expect something to happen maybe on our next hourly candle open right here at 12 a.m. New York local time, which is going to be in 30 minutes. Probably something before that. Let's actually have a look at our daily chart and see where we are currently at. Let's get rid of all our draw. No, not like this. We are going to hold down Command or Control, depending if you're Apple or Mac. We selected all this, and now we're clicking on Settings. We go over to Visibility, and we simply choose on what time frames we want to see all those drawings. And we want to only see those drawings on a minute-based time frame, so we do not want to see it on a hourly based time frame. So we unchecking this box. We don't want to see it on a daily time frame, and we don't want to see it on a weekly, neither monthly time frame. So we're disabling all that. And now all those drawings are only visible if we go down to a 5-minute time frame. So let's go back up to our daily and do some higher time frame analysis. So basically, oh, look at that. Nice volume inefficiency right here. This is likely to be run. And okay, we have our sell side liquidity that we already took out yesterday. This is a equal low sell side liquidity. Ideally, this is colored in red as well. So we have our volume imbalance or volume inefficiency right here as well. At what price level? 3920. So above our 000 level of 3900. We are inside a Well, we are about to touch a bullish order block. Right here. So this is going to be our daily bullish order block, because right now our bias would still be a uptrend until we have a major change of character, which we could consider this as our change of character for a trend to the downside, since we took out major buy side liquidity, at least on ES1, the continuous contract ahead. Let's also check right here if we have that same daily volume inefficiency on ES1. Yeah, right here at 3920. Yeah, that's both matching up. Also drawing it on this chart. This is going to be a major point to look at, a very important point to look at. And in terms of where it is actually, that's right around our Asian range basically. And our 2 a.m. Can someone stream Ethernet stream? It's Max Fierce. You can also watch it on YouTube. If you can't watch it here on Discord. So let's go back to our daily time frame. Okay, we don't get as much information right here. We have major sell side liquidity, I'd say, below those two lows. Of course, we have this massive wick to the downside, but I also think that this was a FOMC news event, like the one we had. Usually it happens around the 10th or 13th every month. So that's why those yellow green lines are here every time on a 13th. So here we had FOMC news or CPI news on the 13th of September, basically shaping this major bearish candle. And then here on the 13th of October, we had this big wick to the downside that bought right back up, starting basically this trend to the upside. And now if we look at, I don't know if you're a fan of trend lines, but sometimes I am. Sometimes they do tend to work. If we take this low right here, of course I'm not taking this low. We could be looking at what a trend line would look like if we take this low, but you see it wouldn't make sense really. We got 1 bounce, 2, 3 bounces, and a 4th bounce off this trend line right here, which is matching up with our sell side liquidity, which we now officially broke. So in terms of like, just like drawing trend lines sometimes to tell if we are in the front side or back side of a move, which we actually could be seeing very soon, if we could see a drop below all those lows continuing into this downtrend. After taking out all the major sell side liquidity, after filling in this massive fair value gap that we left behind during the last FOMC event on the 13th of September, right here. All right, so let's break it back down to a 5-minute time frame and see what's happening. This is the daily order block. I'm gonna get rid of this one for now, right here on our lower time frame, since we're not holding trades at least overnight. At least I'm not. Go YouTube, link, and no problem for streaming. Yes, and we're still in this sideways consolidation. Nice. No divergence right now on any of the major indices at all. We've been basically going sideways for the past 1 hour and 5 minutes. So we can be looking at a impactful move after this consolidation. Why do you use the futures contract price for indices rather than the cash price, for example? You use NQ1 rather than NAS100 cash price. Because I'm trading on a futures account. I don't know why I'm not using the cash prices, because aren't cash prices usually CFDs? And CFDs are also usually always priced differently depending on what broker you're using and blah blah blah. That's why I'm using a future contracts chart, because they're regulated. I'm paying for the premium data here on TradingView. I think for an additional $4 monthly, you can get real-time tick data here on TradingView for all CME charts, and that's why I'm using them. Because if you, for example, look at GBP USD, right now, where we basically formed our day's high right around 1.22223 here on FXDM. And if we go over to, for example, I don't know, let's do 8 cap. We formed our high at pretty much the same price. I guess it does not make as much of a difference. I just like trading futures, that's why I'm using it. ES continuous versus ES March contract difference in hitting the daily order block from 9th of November. ES continuous versus ES March contract. Alright, let's have a look. 9th of November order block. Right here, this one. Now we can do this quickly right here. So here we are going to use the ES1. Also on a daily time frame. Now on ES1 we are still, so on the continuous contract ad, there's a huge divergence basically. If we compare the two, our order block would be sitting right down here. And on our March contract chart, we already touched the order block basically. That's sitting right here, only with its wick, but we still touched it. Right here. Now, come on. Here we go. So yeah, there is an actual quite a big difference between the two. We haven't even filled in this bullish fair value gap here on the continuous contract ahead. But I think I've heard TheMas7er also saying that he's switching over to the continuous contract ahead starting from tomorrow, pretty sure. But personally, I'm not sure why there is such a difference between the two. I couldn't give you a elaborate reason for that. That might be a good question to ask TheMas7er. Alright, still going sideways. That's good fun. GBP USD also still in this downtrend. USD JPY going sideways as well. The market's boiling up for something, not coiling up. Based on the divergence, we could assume maybe a long retracement to eventually take it short into our, since we already have the short bias confirmation on all three charts, on all three major US indices. Short bias confirmed right here at 10:30, short bias confirmed here as well, and confirmed here as well at 10:30. Asked this 2 times in the chat. This is due to the rollover of contracts. Okay, that's interesting. I'm just going to stick to the continuous contract ahead.